So today we're going to talk about passive income investing. And why do you want to invest? I guess what the question is why would you invest versus save? So investing is when you make your money work for you, and the goal is really to grow your money over time. So let's take, for example, Eric, who put in 3,000 per year for 20 years in a savings account with 1% interest, while Mark also putting in the same amount of money, but now he's getting 6% yield from the market. So you can see the difference between the two. After 20 years, Eric has 67K, while Mark has already doubled his money. And so another thing why you want to invest is you want to maintain the value of your capital and exceed the pace of inflation. So the 50K that you have now, in 20 years, will have lost 45% of his purchasing power, meaning you can only buy 27K worth of products in 20 years with this 50K if you do not invest your money and make it grow for you. So Marvin, do you want to share something with regards to this?
Sure. Before that, I'd like to thank DragonFi for making this event possible. It shows how much you want to educate Filipinos and how important it is right now for Filipinos to digest information. Because I do believe that it spells a difference between making the right action when it comes to their money. And I just want to share this. The slides that you showed us are very fascinating because it shows how we could beat inflation. But one of the things that I'd want to narrow out to people also is that when you start investing, you're building assets for you, and those assets, you might be watching this right now, you're in your 20s, 30s, 40s, and you're in the prime of your earning capacity. That earning capacity right now, while you're an employee, you're a business person, that won't last forever. And the reason why we invest is so that those asset classes will carry the load for us. I need you guys, whoever's watching this, that for every peso you invest, you're buying time for you in the future. You're buying freedom for you in the future. You're buying something that if you can't work for yourself anymore, whatever you planted today is something that will somehow give you also revenue. And it's counterintuitive because it's not something that you get to enjoy today. However, there will come a point in time that you have to realize that while you are planting seeds, while you're working today, you will also reap it also in the future. So it's not just you beating inflation, but it's you having the ability to have another stream of income that will work hard for you when you can't work hard anymore for yourself.
Got it. Thank you for those, Marvin. Well put, well said. And so here are, we also want to talk about the different ways that you can make your money work for you, right? So it's not only about dividend paying stock, but we also want to let you know like what are the different passive income streams that you can get. So first would be high yield savings account. You can put it in savings accounts that give you anywhere from 3, 4, or 5%. You also have fixed income securities or bonds. There's also real estate rental income. If you are fortunate enough that you have your own maybe condo or house that you can rent out, that's also something like a passive income stream that you can get. And the fourth and the fifth would be something that we will be discussing more of today, which is dividend paying stocks and real estate investment trusts. These are stocks and trusts that you can actually invest in through the Philippine Stock Exchange. So let's get into the power of dividends. So just very quickly, what is a dividend? So dividends are a share of the profit a company earns that it gives back to its shareholders. So the best dividend stocks definitely pays dividends on a regular basis. So usually it's quarterly, semi-annually, or annually, and increases their payout over time. So most people usually look at yield, but we also have to look at the growth of the dividend that is being paid out. So those are the two things that we should look out for. And there are 3 types of securities that will earn you dividends in the PSE. Marvin, can you help us discuss?
Yeah, sure. I want to also share about dividends and what attracted me to it. Because when I started investing, parang everyone hears about the stock market and they're lured into capital appreciation, which is also amazing. But part of the slides that you mentioned there at the start, you mentioned that it's a portion of the earnings that's distributed to the shareholders. And if there's one thing that I want people who are watching this to somehow narrow down on, when you buy stocks that are giving out dividends, you are already buying companies that are already earning. You can already filter out, you can narrow down your list already. 200 plus stocks in the PSE, it's easier for you already to nitpick. Okay, these are the companies that are earning, but they're not just earning. People need to realize is that when they invest in dividend paying stocks, they're earning, but they have money that goes on for their operations and expansion, and they also have money that is left over for investors. So that makes it a bit fascinating. Now, moving on to those three stocks. Number one is common stocks. What's nice about that is I do believe it gives you a hybrid, no? Because there are some stocks that pay little dividends, but they reinvest it more into the company, which will give you more capital appreciation later on. But there are also different common stocks also that as they give you those dividends, their yields are relatively higher. And I think that will hit different strategies, because when I was younger, I wanted those stocks that had higher capital appreciation, but would give me a bonus dividends on top of it. But if you are starting to get older like me, I started to also put a certain portion of my portfolio into common stocks that will give me dividends, because here's what we need to realize. I don't know where the market will be 10 years from now, 20 years from now. We can make all of our assumptions, but I don't know where it will be. But I can look at the earnings, and from that earnings, and I can also look at the track record of the company, and from that track record, I can also see what's a level of predictability that I can get from a cash flow perspective. So that's one, common stock. Number two is preferred stocks. And this is commonly somehow compared to a bond, no? Because when you, for those who don't know, when you buy a bond, it's essentially you lending out your money either to the government or to corporations. And when you lend out your money to government or to corporations, they use that money to expand or to do things. But what's interesting about preferred shares is this. Number one, because it's a stock, you're given a percentage of ownership. They would give you a higher yield. But not just that. From a long-term perspective, the taxes are only 10%. When you go for bonds, it would pay you 20%. And you will save a lot of money over the long term. And especially if you're like comparing apples to apples, Ayala Corp bond or Ayala Corp preferred share, you're literally analyzing the same company, a very, very good and strong company that will last for a longer period of time. And what's interesting about that, it's similar to a bond that will give you fixed dividends. They're essentially pegged to a certain percentage, but they're not like bonds na utang siya na kailangan ko ibayaran. Bondholders will be paid first, then preferred shareholders will be given a portion of the income after. So it's not something that they owe to you, but it's something that they will give you as a portion of the revenue that's there. And similar to what I said earlier, na tumatanda na ako, it's nice that you get to, kunyari, if you're trading or investing, when you earn from capital appreciation, don't take that money out, but use that to invest in either preferred shares or common stocks that give you dividends, and that will be your passive income. What I always tell people is you can look at it this way. A lot of people in real estate flip houses or sell property, but once they start making money from that, they buy properties that they can rent out, and they can get passive income from that as well. And you can use preferred stocks as a way for you to also get predictability and passive income. And I just, sorry, I'm sharing too much, but this was super helpful also for me during the lockdown when we didn't know what was going to happen to the market. We didn't know what was going to happen to the world at that time. But I knew that as long as the company was healthy, even if the market took some time to recover, there was a predictability in the cash flow that I would get. And number three, REITs. I'm a fan of REITs because it's a hybrid for those. Real estate is the game. Real estate is a good way for you to earn money over the long term. However, not everyone can buy property at the get-go. But what's interesting about REITs is the REITs that we have in the Philippines, from companies that are connected to solar or to commercial properties or to offices, not a lot of Filipinos can buy buildings. And a normal Filipino like me can't buy a building in the heart of Makati. But REITs give people the ability to be able to buy that. And what's interesting about that is you don't have to manage the REIT itself. coming from someone who rents out properties, hassle na magde-deposit ka ng cheque, you have to do customer service.
Yes.
This one, every quarter you get your payout on a regular basis, and a lot of them already now beat a lot of the, if you buy a condo now, it would beat the yields that you would get from condos that you would have there. Plus, what's interesting is it's liquid. You can buy it in tranches, and you don't have to be a multimillionaire to be able to experience it. And the yields, I do believe, are better than buying a condo and renting it out as well.
Yes, exactly. I totally agree. So these are prime properties, right, from big corporations. And sometimes, just to buy one condo, it really is very expensive now. So you're really putting all of your money into one property if you only have a few million pesos. Actually, that's already a lot. But then if you invest in REITs, you're actually already diversified, right? So because there's somebody like professionally managing the REIT itself, and it's really a lot of properties that you're investing in.
And Kathy, I would just like to mention this, that you could have exposure already without taking out a loan. For common Filipinos, we need to take a loan to be able to be exposed to the real estate market. Here, 10,000 pesos, you already have exposure and gain the experience and competence already towards it.
Got it.